I am the aforementioned Steve Kohlhagen that Mark introduced earlier. I do want to say that I appreciate his plug for my books, and I do want to put everybody at ease. Where They Bury You is not about academia or Stanford, and it's also not about Wall Street. So just those. The structure of the day is pretty interesting. In these next two sessions, it really is a top-down. Federal government, the state government, and then we'll get into some of the issues. A month ago, I was reading the USA Today sports section, and there was a comment in the USA Today sports section that said, the Giants' prospects in the postseason, sorry, Chris, the Giants' prospects in the postseason, if getting the 27th out proves more elusive than affordable housing in the Bay Area, the Giants will have a problem. And it turned out to be prophetic and also relevant today. We have two speakers here on the federal government side. Raphael Bostok is a professor, he has a PhD from Stanford. He's a professor at USC in public policy, governance, and public enterprise. He was approved by the Senate, by an Obama appointee, to be Assistant Secretary of HUD, and I think that was the last person that ever got approved by the Senate, right? Something like that. I think Raphael may have been the last person in the Republic so far to be approved by the Senate or an appointment. His research spans every topic we're talking about here today, all aspects of home ownership and institutional effects on home ownership, and he is full disclosure, he's my friend and my colleague on the Freddie Mac board. We have a sort of a Freddie Mac flavor to this session. Scott Krull has an undergraduate degree from Berkeley and has been 30 years in the housing market. The last 6 as the senior managing director at Freddie Mac for the multifamily business in the West, which is about 20% of the multifamily business at Freddie Mac. Before that, he worked with many real estate investment groups, including John Hancock and other investment groups. And so his career, 30-year career, has been in the housing investment, housing business. We'll start with Raphael, we'll go first, and then Scott, and then I'll ask a couple of questions, and then I'm older than Mark, so everybody looks like a student to me, but I'll do my best to only call on students.
So good afternoon, everyone. It's really good to be back on campus. I spent a lot of time in Encina Hall over there, and then in Landau, so this is the old neighborhood, and it's good to be back in familiar haunts. Steve had asked me to talk a bit about federal housing policy, but before I do that, I can't help but take an opportunity to comment a little on what Professor Chetty reported out and presented this morning. As Assistant Secretary at HUD, I spent a lot of time on these issues. And listening to him talk gave me a flashback to being in Washington, which wasn't the most pleasant experience, but Raj, you were great anyway. But for me, it was really brought me back to a lot of the issues. And I would say just a couple things. The first is the MTO experiment, the demonstration, is a really important demonstration because it shows that place does matter in a very significant way. He talked about income, but it has also been shown to be quite important when it comes to health outcomes, when it comes to stress, and a whole host of other things that then have additional impacts on people's lives and their ability to make good decisions, and that's really important. The other thing that's really important is that the income effects that we see don't happen in 3 years. They don't happen in 5 years. These are long-term effects. These are long-term issues, so we should really be thinking about our programs and program evaluation over much longer spans than we usually do, and that's an important thing. A second thing I wanted to point out is that the voucher program is a difficult program. And while it's in principle a good idea to allow people to move and have access to all these neighborhoods, the way that the program plays out makes it very difficult to accomplish that because landlords don't have to participate in the program. Right? You have to convince landlords to participate in the voucher program, and many of them don't want to do it, particularly in markets where you're capped on the amount of rent you can get if you participate in the voucher program, and in a place like the Bay Area, you can get a whole lot more than that by exposing yourself to the marketplace. So we have to figure out ways to make the program more appealing to landlords so they can participate. And the third thing I would say is the social networking. So Professor Chetty noted that when people get vouchers or they get cash, they don't move to the Beverly Hills. I'm from Los Angeles now, so they don't move to Beverly Hills. They don't move to the most affluent place. And I think in part, it's not about information. It's about network and comfort and fitting, right? Because you can be isolated in a poor neighborhood, or you can be isolated in a rich neighborhood if you don't have those resources. And so we need to find ways to create connectivity for everyone wherever they live. And Baltimore does do great things. I actually worked on the case that helped promote the Baltimore Mobility Program, and I'm really excited to see how that will turn out. At all. So if you've ever seen me in class or do anything, technology never works for me. So this is fully consistent with that experience and makes me feel even more at home. Yes, exactly. So anyway, I do think this stuff is important, and the most important thing that you all should take from this, and I would say this to Professor Chetty in particular, the idea that diversity leads to better outcomes for everyone is not an idea that most people believe. And so we need to be doing things to try to make that message as clear and as well understood and develop redundancy and evidence so that it's something that people can't ignore. Because today, if you ask people that question, they don't actually think that that's really how the world works. And until they believe it, they won't embrace it in policy and action. So we have to make sure that we do those things. All right, so now I'm going to talk about the things that I was supposed to talk about. Steve, sorry about that. So I'm supposed to talk about federal housing policy. I'm going to talk about just a broad overview of what we do from the federal government in terms of providing support, and then some of the issues that arise in that. I'll try to do this relatively quickly. The first thing that I want to say is that when you think about housing policy, the federal government only touches very specific things. It touches housing finance, so we think about rental assistance as a way to provide that financing, but you think about mortgages, Fannie and Freddie, mortgage interest deduction, all of those things are really on the financing side, and how do you get into housing. But it doesn't touch on the things that determine what's available, right? Where is housing available? Land use, those sorts of issues. They're all determined locally, and you're going to talk about a lot of this later on, but that's an important element of thinking about what our housing policy is and how it works out. I would also say that rental assistance is another one where we think about Section 8, we think about the tax credit program as federal programs, but a lot of it plays out at the local level. There are local players that decide where those units go and who lives in them, and so we should not think about the feds as really being the only game in town. So when we think about where we spend our housing money in terms of policy, this is a chart which shows what we do. Now, Professor Chetty talked a lot about the stuff in blue. That's the rental assistance. That's the Section 8 program. That's the low-income housing tax credit program. But that's actually not where we spend most of our housing support money. We spend it on the home ownership side. Most significantly, where we look at the housing, the mortgage interest deduction, the real estate tax deduction. These are the ways that we spend most of our housing policy money. And interestingly, it's through the IRS. Right? The tax code is really how we do our housing policy, much more than anything that's affirmatively active in trying to go out. These are passive things. You just do it as built into the code. But we spend 3 times as much, almost, on the home ownership support as we do on the rental support. And so one of the questions that comes up is, should we be shifting this? Is this really an appropriate way to be doing our housing policy? But it's an important thing to keep in mind. And it becomes an even more important question because when we think about who's going to take a mortgage interest deduction is not the poor people. It's not people who are actually feeling significant housing burdens. Rather, it's going to be people that have higher incomes, that are going to be more affluent, that will have more options from a consumption perspective. And so you see here, I guess that's the right side, we show the distribution of families in terms of the burdens that they face. Right? The families that are paying more than 30% or more than 40 or 50% of their income just to cover housing. You see this skewed, not surprisingly, to the lower end of the distribution. When we look at who actually claims credits and who's getting the benefits and who the beneficiaries are, it flips almost completely. The vast majority of those benefits accrue to people and families that are earning more than $100,000 on an annual basis. And so when we think about sort of what our policy is and how it is, these are things to keep in mind. And this is another way just to look at it, to see where our housing subsidies go relative to where our home ownership subsidies go, and then how that looks on an income basis. Right? And I think the picture is pretty stark. And this is not something that we see people talk about very much when we think about housing policy. We do a lot of housing policy that's just kind of floats under the radar screen. And then there's a lot of evidence and question about whether, in particular, the ownership subsidies, that mortgage interest deduction, does it create new homeowners? The evidence tends to say no. Rather, what it does is it causes people to buy more house. So we get bigger homes, more housing consumption, but not new people getting into the housing consumption space. All right, so I want to talk a bit about the rental side, the rental assistance side. And, Professor Chetty talked about a number of these things already, so I'll go relatively quickly. But we do try to provide assistance both in the context of the demand side, so what families need, but also on the supply side to make sure there are units that are available in the marketplace that are affordable. Because if you only did the demand side, if you're in a place like here, there's not going to be enough units. Right? Those people will be at a disadvantage in terms of the auction and competing for units. And so we need to make sure that we are doing things to provide supply support as well. On the supply side, the Low-Income Housing Tax Credit Program, this is a program that actually today, over the last 30 years, I guess, has been the primary producer of rental housing in the United States. I think almost 60% of all rental housing has happened through this program. And it's important, it's significant, but it only takes us so far. On the demand side, we've heard a lot about the Housing Choice Voucher Program. There are actually two programs. The way that program works is that if you get the voucher, you pay 30% of your income, and the voucher covers the rest up to what we call a fair market rent. HUD does a survey of housing units. They pick the 45th percentile and say that's what you can get. We'll cover up to that 45th percentile of rent, but you only have to pay 30 and we'll fill in the rest. All right? Landlords have to agree to participate in the program, as I said earlier. And so we're thinking about landlords, which landlords would be willing to accept 45%, right? The 45th percentile. Right? And so we wind up with a constrained geographic distribution because it's a choice, and those who can choose to earn more often will do that. All right, so I talked about the limitations. So this last thing I talked about is the bottom bullet here, which is that rental assistance, the way the program is structured, leaves neighborhoods inaccessible. This is a contributor to segregation. If you think about the correlation between income and race, right? If we see that there are these limits, then the people that get the vouchers are almost by definition going to live in more highly segregated neighborhoods, heavily minority populated. So there are proposals to try to change this and fix this. So while I was at HUD, we started a demonstration project where we tried to adjust how we calculate a fair market rent. So typically that's done at a metropolitan area level. What we've tried to do is say, let's do it at a zip code level. Let's take smaller areas that have different types of price points so that the rents become more appealing at the localized level. What we see is that there is some mobility that happens because of that, and there's still a lot of evaluative work that needs to be done, but that's an attempt to do that. An important limitation to all of this is the second bullet, which is rental assistance is a lottery. All right, so if you look at the people who have need, who have high housing burdens, housing cost burdens, only about a third of them get any rental assistance at all, which means that 2/3 of all housing needy people are on their own. They're left to sort of deal with the market and make do as best they can. And this troubles some people, as you might expect. So there have been some proposals on how to fix this. So one is to say make vouchers universal. If you hit a threshold, you should get a voucher. And if you've read Matt Desmond's book, Evicted, if you're familiar with that, that's his primary policy proposal. I will say that there's never been a time in the history of the United States where we've decided to do that where housing is concerned, right? And so it will be a significant change in how we approach support for the poor if we were to go that route. And then there's a proposal that I'm working on now, which would take the earned income tax credit, which is a much more widely enjoyed benefit by people, and add a housing supplement to it. So that if you live in a place, you're getting a tax credit. If your income, even with the credit, doesn't get you enough to where you're paying at least 30%, at most 30%, we'll supplement you to get you there. You're working hard. I think that kind of policy has a much better likelihood of success in our political environment. And then the last thing I would say is the tax credit program requires, it's a program where you have to want to get credits on your tax code, right? So that only works when firms are making money, right? Because otherwise there's no tax. And so this means it's like a pro-cyclical program, and we actually need rental housing support to be counter-cyclical. We need to be ramping up production in precisely those times when the market is weak. And so we don't have good proposals for this. There's a carry-forward provision. We can talk more about revising the tax code maybe in our discussion. That's a much bigger discussion. But I'll stop right there. So thank you.
All right, thanks for having me here today. Great to be here and see such a strong turnout. So Raphael covered, and same with Raj, more of the subsidized or governmental approach to housing. I'm going to be more focused on more of a market-driven or capitalist approach to what's happening in the housing market. And what I can say right now is they're not building affordable housing unless it has some sort of subsidy. Most of the affordable housing we have right now is what was built 30, 40, 50 years ago. And so the only way we can address that is by trying to figure out ways to produce more affordable housing, hopefully without subsidies. One way we're doing it is we're seeing apartments shrink. And now we've got micro units out there where people are living in practically walk-in closets. So not the most ideal situation, but it's a private approach to a public problem. But I don't think it's a very good solution. Anyways, I wasn't planning on covering that, but I do want to just mention that. So let me just say that I'm managing director, like Steve mentioned, for Freddie Mac Multifamily, covering the Western region. And when he said we do about 20% of the business that Freddie Mac does in multifamily in the nation, last year that meant we did over 600 apartment loans for over $12 billion in apartment financing. So when we might not do every loan out there on apartments, but there's a good chance we see every loan that needs financing on apartments in the nation. So who is Freddie Mac? We are a GSE, or government-sponsored enterprise, created by Congress to support housing in the United States, along with our counterpart, Fannie Mae. So Fannie Mae was created in response to the Great Depression in 1938, and their focus, it was created to support housing, but it was a public company, it was a government company like the Postal Service. And then in the 1970s, they got converted to a privately held company when we got created as well to create competition. So we both were privately held, publicly traded companies. And our mission was to support housing. We wanted to provide stability, liquidity, and affordability to the U.S. housing market. But we don't do it by lending directly to borrowers. We do it through the secondary market, which means we are buying loans from lenders, and with the money they receive from us, they can make more loans to borrowers. We also provide guidance in terms of underwriting. We want to make sure that each borrower pays the loans back. Otherwise, it's called giving and not lending, and we are lenders. So today, Freddie Mac is moving forward. I'm still showing this slide here. Let's see. We're moving forward and helping to create the mortgage market of the future. Our goal is to contribute to reshaping the housing finance system with the aim of driving long-term benefits for the industry, for borrowers, for the economy, and for taxpayers. One great example of how we're doing this is the multifamily line of business where I work. So 10 years ago, Freddie Mac Multifamily envisioned a future housing finance system and began the process of transforming our business. We once held all the risk on our books on the loans we bought. Now we transfer the vast majority of it. Our model broadly distributes and diversifies across the investment universe all the loans and risk we hold. So the idea is to disperse the capital or the risk to the private universe and take it away from the taxpayers. We do this through our K-Deal program, which is a securitized program where we structure pools of loans of usually about 70 or so loans and dice it up into different risk spectrums. The highest risk piece is about 15%, and it's sold to private investors. And that insulates the other 85% from losses within that pool of loans. And in so doing, it acts as a shock absorber so that the taxpayer who backs that 85% is insulated, as well as Freddie Mac. And it's really addressing the different risk tolerances within the investment community. So it's a great benefit for everybody. Since we launched the program in 2009, we've done over $154 billion in financing on apartments through this program. 127 different K-Deal pools have been issued, which makes us the largest commercial mortgage-backed securities lender in the world. And the good news is we've had negligible losses because of our credit culture, and no losses to Freddie Mac or the taxpayers because of that 15% cushion that we have to absorb any losses. However, our losses are minuscule. We lead the market in the lowest number of losses as a percent of balance. So today, we securitize about 90% of the loans we make through this program. And we are trying to figure out ways to increase that so that there's no risk at all to us. And this is going to insulate us and taxpayers from any corrections or changes in the market and make it so that we're always able to provide stability. And speaking to Rafael's point, be there when the cycles are going the wrong way. We want to be there always so we can provide liquidity at all times in all markets across the United States. So that's the brief history of the GSEs as well as some of the mechanics of Freddie Mac and how it gives you an idea of where we're headed and how we're trying to insulate the market and really protect the housing future. So now let me cover my favorite topic, which is apartments, where I work, and it's a very exciting time. The fundamentals are just incredible. With home ownerships declining, we're down to 63%. It's the lowest level in about 30 years. So apartments are becoming a more important option to housing across the nation. They're actually probably the most important part at this point in time because there's not enough demand or there's not enough homes. It's harder to qualify for financing, and it's just driving it further that direction. So it's becoming more challenging to meet market demands as a result of that and keep housing affordable. So, why? Well, let's start with home ownerships. I already talked about the home ownerships. You can see the graph here. We are lower than we were in 1995 at 62%, and the trend is just continuing to go down. So one reason for that is demographics. We've got a major change happening in the United States. It's called the millennials. So I think there's a lot of millennials here. You don't need to raise your hands, I can just tell. And And it's not surprising. We've got a group of 75 million people between 18 and 35 years old that form that millennial generation. That's about 10 million more people than the entire United Kingdom, a big group. And so they're entering the age where they're forming households. However, they're delaying household formation. And in fact, their homeownership rate is the lowest in generations compared to the prior generations. It's closer to 30% versus 40% for prior generations. And then now we've got a study that we did, and we're finding that there's a shift in housing taste for baby boomers like myself. These studies are indicating about 5 million baby boomers are going to shift from home ownership to rental housing over the next, between now and 2020. So it's going to really exacerbate the demand problem we've got. And so you're asking, well, what about all the new apartments being built? And you can see cranes everywhere and all that, which is great. But not surprising, we are seeing a supply imbalance. We've had a shortage of construction especially acute over the last 6 years. You can see how low it is compared to the long-term average. And that's created a void in housing. So in order for us to catch up to where construction should have been and has historically been, we need to do 500 million more units in housing. We're nowhere near that. In order to fill the gap, we need to exceed that long-term average. So we've got a long way to go, and I don't see how we're going to get there at this point in time. This is going to continue to push up rents, with softening only occurring when we've got projects coming out of the ground at the same time, and they're competing each other to lease up. So there'll be a little softening, maybe concession up front, but it's not going to really slow down the upward march of rents. There's some limits to where rents can go because of where incomes are, but we're seeing a lot of high-paying tech jobs that are able to keep up with rental increases. It's really the lower-income people that are impacted by it. So now I'm worried about getting the hook. So let's talk about the economy. Bay Area outpaces China and the U.S. in GDP growth. Axiometrics research reports that San Francisco, Oakland, and San Jose have added 335,000 jobs combined in the last 3 years. At the same time, they've only added 37,000 housing units. That's 1 unit for every 9 new jobs, lowest in the nation. Over the same period, Seattle added the same number of housing units, but half the number of jobs. So they've got 1 unit for every 4 jobs. Still a strong dynamic for Seattle. It's not by any means considered a weak housing market there. San Jose added 124,000 jobs over that same period. And what happened? They broke the $1 million mark this year in terms of average home prices. And surprise, Silicon Valley is now the most expensive place to live in the nation, driving more people out of the area to find affordable housing and really exacerbating a traffic problem. And this, in turn, drives people to pay a premium so they can avoid that commute and really it further increases demand and pushes out affordability. It still is possible to find a place to rent in Cupertino for under $700 a month. However, it's not an appealing option, and it comes with many restrictions and limitations. I'm hoping no one here lives in this room. So the good news is that these same conditions are attracting capital from investors and lenders, as well as policymakers. And together, we're all hoping to solve the issues. What we're seeing is, on the private side, with maybe some help from municipalities, new developments that are trying to solve these problems by increasing density and maybe locating themselves near transit stations. We call these things, these properties, transit-oriented designs, or TODs. Here's an example. We did 1 minute. Okay, I'm rushing now. So this is a 650-unit property built by J.F. Shea Company, Ivanhoe, Cambridge, subject to a regulatory agreement requiring a certain number of houses be affordable to low-income people. It's located across the street from the Cottle rail station, so it's providing low-income housing and transit options. We're also seeing rundown, low-density neighborhoods gentrifying into multifamily communities that are close to employment centers, reducing commutes and revitalizing neighborhoods. This is a 218-unit project near Santana Row in San Jose, built the Republic companies. The site was formerly occupied by 10 dilapidated single-family homes and a shuttered appliance store. So it revitalized the neighborhood and brought housing closer to the core. And then finally, give me 3 more seconds, Steve. I've got this project here that was built in San Mateo by Palo Alto Partners and Westlake Development Company on the site of a former police station. The land was provided by the city to a developer that would build a housing that was affordable to vital local services. Those services being teachers, police, and firefighters. People that are getting pushed out of the areas where we need these people. Not to mention baristas and everything else. So these properties serve as examples of market rate and target affordable housing that are being built in response to the market demand. But current construction is not going to get us where we need to be. And so we need to really work together to figure out ways to meet these challenges. Overall, it's a really exciting time to be in this business and to be at Freddie Mac because we feel like we're a vital part of the housing solution and a critical participant in creating a healthy housing market at a time when it is needed most. Thank you.
So, thank you, Scott. Let me be fair to you. Actually, Raphael now combined answering the first question I was going to ask about Raj's presentation into his presentation, so he went a little bit longer. So let me go, to be fair to you. As a 30-year market professional, do you believe that multifamily housing can solve the Bay Area problem?
I think it's probably the only solution. We've got to create greater density, but we've got to also solve it through transportation. We really have a two combo punch here with transportation combined with density to, I think, address, and that's really going to push things towards apartments. There was another graph that I was going to show that shows the San Francisco supply shortage compared to the long-term trend, and it really shows the difference. So it's broken down with a blue bar that shows single-family housing and the green bar, and we're seeing multifamily rental housing growing at really a rapid pace, and single-family almost flat.
Okay.
Can I jump in?
Sure.
So he's exactly right? And this idea that we can keep building the way we have means that we would be building beyond Tracy, we'd be building way, way out there, and for people that live here, that would be their only option, right? And we don't have land to be building single-family front yard, backyard stuff anymore, right? So the only way this is going to work is if we agree. Well, it's not even about agree. If we do it, which is build at greater densities, so that we need units, right? We're down hundreds of thousands of units, and we can't do that in a single-family way.
Okay, let me shift over back to you on an overarching topic. Without making any comments of the current political situation, political system, and allowing that you're no longer at HUD, is the federal government essentially helpless in all this? And are they essentially totally dependent on local ordinances, local governments, state governments?
Yes. So here, the federal government has money, right? And money definitely gets people's attention.
And deductions.
And deductions, right. That can get people's attention, but the scale of the problem in high-cost places is so great that it really requires every party to participate. And they have to decide to. So this is why when I was talking about convincing people that diversity is actually in our interest, that's an argument that then gets to every planning commission, that gets to every city council, because they approve all of these projects. And if they don't do it, it doesn't get done. And it doesn't really matter how much money you have. So the federal government has really tried, I think, to lay out some principles about sort of what we think is important, where we think need is, and there's resources available. But if the communities don't take advantage of it, there's really nothing the government can do.
Is there any hope that, I guess there's always hope. Is it likely that that over the next decade, the federal government will start moving away from subsidizing ownership in favor of rentals and subsidizing the rich as opposed to the less rich?
So it's possible. Look, the mortgage interest deduction, right now, you can claim credits for second homes and third homes and this, that, and the other thing, right? And what's happening, and not really because of the housing crisis, but more because of the budget challenge, people are looking at, well, what are we willing to spend on? So I think there's going to be an opening up of all of this as we think about a revamp of the tax code, but it will be the whole tax code. You won't just see a proposal that's just about the interest deduction itself. And that's what makes this much more complicated.
Okay. Well, the good news is that we're in the middle of actually toward the end of a presidential election cycle, and they're talking about nothing else but housing and tax.
Exactly.
That's the good news. We're getting focused on this.
Exactly right.
Okay, I will try to discern students from non-students for questions from the audience. The question I was going to ask Raphael was to comment on Raj's analysis, and he did that at the beginning, so I think we're there. Questions?
There's one
I'm
right.
pointing over here, and you're probably not a student. You are.
So I had a question that kind of wants to tie in policy recommendations by economists with what's politically feasible, both on a national and local level. And I think that economists sort of have a lot of different recommendations that have been proven to be effective in the data. But then there's this problem where you have to convince the current homeowners that they don't need the mortgage interest deduction, and that other people who are less well off need those funds more than they do. Or at the local level, convince the current homeowners that we need to increase the number of properties and thus decrease the value of their homes. And so so you're kind of stuck in the status quo, and so how do you change that?
Do you want to be defensive about economists, or do you want to let Scott?
Not at all. I mean, I think there's some truth to what she's saying.
I agree.
That we do proposals that really try to say what's the first best outcome, right? And then the question is, how close to that outcome can we get through our political processes? And part of our biggest challenge as a field is that a lot of times we don't talk about these issues and what we know in ways that regular people, city council people, can understand and process and see sort of how their decisions should be shaped. And so I think there is a burden on us to be better in that regard. And I do think that the other piece to this is that there are a bunch of non-economic considerations that come in. So we're segregated for income reasons, but we're segregated for other reasons too. And some of those have come up in the context of this election. But we need to acknowledge that it's a complicated discussion that we're going to have if we're going to get people to really get us as close to the first best as we can get to.
Scott, do you see any of this down in the trenches?
Well, I'm just thinking that we've got this demographic shift that I mentioned before with 5 million baby boomers that are going to be moving into rental housing. That means there's 5 million housing units that are going to be going back into circulation. And if the trend is towards renting, that could have a negative impact on values. So there could be some natural leveling out in terms of where we've been seeing housing going as people start shifting that way. But that's really kind of my thoughts.
Okay. Other questions? I can go to a non-student now. So, yes, sir.
You got one over there too, Steve. On your right, Steve, you got one too. Oh no, he's not.
My name is Barry Chen. I'm the mayor of Cupertino. Thanks for mentioning about Cupertino. We're one company town, just Apple. So, to deal with Apple is got enough headache. Okay. I disagree with you. It's not we want to build. It's we have to agree to build. This American democratic system, if the people doesn't agree, then they can file the initiative to stop whatever the city council decision is. And if the city council take a strong stand, they will get recall. So I'm under recall right now because I'm for high density, I'm for the transportation, but there's a group of people, there's a small group of people in the city of Cupertino file the recall and file the initiative. And the American system is, democratic system is really got into the problem. We got to solve it, okay? It take the citizen, 20 people, to file an initiative and only spend $220 to file an initiative. And take us, city, to spend $1 million just for that initiative to this state, okay? And if they pass, it will cost the city even more money. And all this money is wasted for nothing. And this system is so, I don't know how to say it, okay?
So
Like 20 people can file the recall, okay? And I have to deal with the reputation, the character assassination, all this going on. And this dilemma will end it until next Tuesday if they get enough signature to recall me or not. But I'm not afraid to talk about it because I know I'm doing the right thing for the people, and this got to do it. I mean, I've been in politics long enough. We've been talking about the housing and transportation problem in Silicon Valley, but no political leader or business leader are willing to tackle this problem, and that's why this problem is going to get worse and worse. So I'm sorry. I don't mean
Let me defer the answer to Linda and Stephanie in the next session, because that I think it's more germane to the California session.
But you guys should have a session on this issue about the initiative and how it's too easy to do initiatives.
Yeah.
And we need to change that process because there's, how many initiatives we have in the ballot this round? Like, I think we have, there are 20 at the state. I think we have 45 in Los Angeles. That is not a functioning democracy, right? And we need to figure out how to fix that. So you guys, go to it.
Don't get me started on our political system being broken. But this is one of the, I mean, for those of us involved with Freddie Mac, and there are 4 of us here, it is a symptom or a special case of where the federal government isn't doing its job. And not that Freddie Mac isn't, but the Congress and the administration are not doing their job in terms of dealing with housing finance. And this is an example at the local level. So, I don't know, we have a 3-day session on the political system. Yes, here, I guess? Or you need to get a mic.
Yes.
I just follow orders. I'm supposed to-
I want to say that I think some of the tension in the local cities is not that people are against high density or diversity. It's they're concerned about the impacts of what's happened in the last 10 years with increased development and traffic specifically. I think if you polled up and down the peninsula, you'd find that that was the #1 issue for people. So that is the transit, I think, is the...
So can I just speak to this, though? Because that always frustrates me. The reason we have traffic is because people have to drive too far to get to their jobs. If they lived next to their job, they wouldn't be on the road and your traffic wouldn't be that bad, right? And it's gotten worse precisely because we've dispersed everyone all over the place, so they have to get places. It is remarkable that people do not see the link between the lack of housing and the existence of traffic and the existence of congestion. And until more people talk about this and actually say and acknowledge the reality of what's driving this, if we took a poll of all the people who are on the road when this traffic is happening and asked them where do they live, my guess a lot of them don't live that close to where the traffic is happening. And it's just a through, right? And if we can get to that recognition, that realization, then maybe we can actually start to have a real conversation and people would be more willing. And so maybe this is an area for research to try to make that case so that people understand that everything is connected. We can't think about housing just as housing. It determines all of our commute patterns. It determines what stores are going to be located in places. It determines what the school systems are going to look like. It is fundamental.
I would just question, is that really, do people really live purposely close to work? I was under the understanding that some of the research suggests that people live close to where their kids go to school, particularly up and down the peninsula. People choose school districts, so
So
they
sometimes
don't
people,
necessarily live.
so
choose to live.
sometimes people have choices and sometimes they don't really, right? And what we're finding in an environment where the inequality and the separation between the haves and the have-nots grows larger and larger, the choice set for people who don't have resources shrinks significantly, right? And so as when we get to that dynamic, now we are saying, okay, the people who can live close are the people who have resources, and they will, and then everybody else will not. And it's sort of when Professor Chetty was talking about a large middle class, that's a proxy for less disparities in our ability and more inclusiveness in terms of, or breadth in terms of the choice set that we might have.
You know, I lived in the Bay Area 14 years, and these two guys are Los Angelinos. But in the real world, okay, outside of California, there are actually people who live near where they work. And I realize this is about California housing, it's about the Bay Area, but there are solutions besides the one that California has evolved to. There was a woman back here, I keep not calling on. No, right there. Thank you.
Hey, thanks. I'm Sarah Kimberlin, and I'm a postdoc at the Stanford Center on Poverty and Inequality here. And I had a question for Raphael. I've heard the proposals for the housing supplement to the EITC, and what I think is very interesting about it, what I really like about it is among the things that we've talked about, it seems like something that does have a lot of political feasibility potentially. One of my questions was one of the things I think about is how much it makes sense to link the housing subsidy to the EITC specifically, though. I mean, I can see the attractions of having it as a tax credit, but in terms of, there are, I think, a lot of people with high housing cost burdens that aren't eligible for the EITC, like anyone who's unemployed or has a disability or who's a senior. So in that way, in some ways, I would feel like it's kind of has that same problem of not being counter-cyclical at a personal household income level. You know, that at the time when you most need the help with the housing is when you have the lowest income and the least earnings. So I just wonder if there's what the sort of thinking is behind linking it to the EITC versus kind of detaching it from that.
Yeah, so I would say two things. The first is you're absolutely right. You know, the EITC doesn't touch everyone, and it's really oriented toward the working burdened, right? So if you have a job, you're burdened, and that leaves a lot of people out. So no one should think that that is a silver bullet. But I think going back to the earlier question, I wanted, and we want to think about something that actually has a hope from a political perspective of happening. And what we know is that the EITC touches far more families than the voucher program does. And so if we wanted to broaden the support, like that's a vehicle by which we can accomplish that, but it wouldn't solve the whole problem. So your observation is correct.
I think we have time for one more question. I guess here, maybe two.
Thank you. Just to piggyback on some of the other questions, Raphael, I'm wondering if you can share some of your observations of how people working in housing policy, finance, and development have received Raj Chetty's research and have interpreted some of his policy ideas. And he could probably speak for himself, but you operate in those circles, and I'm wondering if you could share some observations and some theories on where that reaction may be coming from.
Some love him, some hate him, right? So another challenge in all of this is that, you know, the advocacy community has its own infrastructure, right? And a lot of what Professor Chetty is talking about challenges that orthodoxy and really says, you know, maybe some of the things we're doing we shouldn't do anymore. And that has really triggered some pretty strong reactions that people are like, see, I told you, I was right. And then other people are like, but we can't just abandon all this sort of stuff. And so within our policy community, there's a lot of passion and a lot of argument, and much of the gray hair on the top of my head was trying to sort of referee discussions between these people as we were trying to do policies in this space, because it gets heated, and because we have a finite amount of resources, everyone views it as zero sum.
I think we have time for one more question if it's quick. Here,
You
the
should have it
gentleman
be
in the
for
blue
him.
shirt. What?
You should have it be for him.
Okay. Scott, you have to answer this question.
Okay.
All of these issues are so intertwined that makes them difficult. More affordable housing, higher density, more affordable means lower property values per household. And our educational funding is via local property values. So one of the difficulties that this could bring is that having more affordable housing actually will create less funding for the school districts that have those high densities compared to the single-family home, more wealthier districts. So I think it's also important that we get involved in more equity in educational funding across school districts. One of the dangers is more affordable housing could actually make the inequality in educational funding actually worse.
Well, I think when you're adding density, you're going to add value. So you have a parcel, an 1 acre parcel you can build one house on or build 20 units on. You're going to see a vast difference in value between the two. So by creating that density, you're actually increasing values, and you should be able to increase income to the municipality as a result. So thus being able to fund education and healthcare and the things that are so vital to those neighborhoods and make it so that you're creating a community within that neighborhood. There's a group called Turner Impact Capital that does just that. Instead of going in and recapitalizing properties and renovating them, they're trying to preserve them and then bring services to those properties so you've got a community where people can stay and grow and not be priced out due to pricing impacts. So I don't agree with you as it relates to apartments displacing income. I think apartments will increase income because of the increased values created by the density. And hopefully with a properly integrated neighborhood, you're going to see it become much more vibrant than it would be if it was just a single family home. There's a perfect example of not gentrifying in this company called Hub House. I don't know if you've heard of it. They go into single family neighborhoods. I think they buy houses and then they create a commune. So you'll have 5 people living in this house rather than commuting together. And so it's like having a little fraternity next door, but it's co-ed. So I don't think that's the way to address housing values either. That would probably drive housing values down. This will increase values.
Let me end with thanking everybody for braving the traffic to come here, apparently. And also I'd like to thank Raphael and Scott for taking the time because this was pretty interesting. We now move to California policy, but I would also like to especially thank Scott and his daughter who are here. Scott's mother-in-law passed away suddenly yesterday afternoon, your grandmother, and they came here anyway today to be here to do this, and they'll be flying back to LA to be with their family. So I'd like to thank you for going the extra mile for this.